rank in the history of economic theory or thought?
As a man with a great many ideas who knew very little economics, that's literally true. So he knew nothing but Marshallian economics. He was completely unaware of what was going on elsewhere. He even knew very little about 19th century economic history. His interests were very largely guided by aesthetic appeal. And he hated the 19th century, and therefore knew very little about it. Even about its scientific literature. He was a really great expert in the Elizabethan age.
I'm absolutely astounded that you say that John Maynard Keynes really didn't know the economic literature.
Oh,
He had
very
surely
little,
gone
very
through.
little. Even within the English tradition, he did know very little of the great monetary writers of the 19th century. He would know nothing about Henry Thornton. He knew a little about Ricardo, of course, the famous things, but he could have found any number of antecedents of his inflationary ideas in the 1820s and 1830s, and when I told him about it, it was all new to him.
How did he react? Was he sheepish?
No, not in the least. He was much too self-assured and
amused.
Convinced that what other people could have said about the subject was not frightfully important. When at the end, well, not in the end, there was a period just after he'd written the general theory where he was so convinced he had redone the whole science that he was rather contemptuous of anything which had been done before.
And did he maintain that confidence to the end?
I can't say, because as I said before, we'd almost stopped talking economics. Great many other subjects, general history of ideas and so on, we were interested. And, you know, I don't want you to get the impression that I underestimated him as a brain. He was one of the most intelligent and most original thinkers I have known. But economics was just a sideline for him. And he had an amazing memory. He was extraordinarily widely read. But economics was not really his main but his own economics was he was convinced he could recreate the subject. And he rather had contempt for most of the other economists.
Does this tie in with your two kinds of minds? You wrote an Encounter some years ago, a piece that
Well, curiously enough, I would say Keynes was rather my type of mind, not the other. He certainly could not have been described as a master of his subject, which I described the other time. He was an intuitive thinker with a very wide knowledge in many fields, who had never felt that economics was weighty enough to, he just took it for granted that Marshall's textbook contained everything one need to know about the subject. There was a certain arrogance of Cambridge economics about. I mean, they thought they were the center of the world, and if you have learned Cambridge economics, there was nothing else worth learning.
I'm interested in your earlier comment about the fact that here is a man of immense intelligence, great imagination, wide learning, and so on, and yet was not an economist. And I'm not clear whether you mean he didn't have the kind of mind that excels in economics, just as mathematics. Say you can find people who are brilliant, but who, given mathematics, are just hopeless. But do you mean he didn't have the kind of mind that makes for first-rate economists?
Oh, he had. I mean, if he had given his whole mind to economics, he could have become a master of economics, of the existing body. But there were certain parts of economic theory which he had never been interested in. He had never thought about the theory of capital. He was very shaky even on the theory of international trade. He was well informed on contemporary monetary theory, but even there he did not know such things as Henry Thornton or Wicksell. And of course his great effect was he didn't read any foreign language except French. The whole German literature was inaccessible to him. He did, curious enough, review Mises' book on money, but late He even knew very little about 19th century economic history. His interests were very largely guided by aesthetic appeal. And he hated the 19th century, and therefore knew very little about it, even about its scientific literature. He was a really great expert on the Elizabethan age.
I'm absolutely astounded that you say that John Maynard Keynes really didn't know the economic literature. He had surely gone
very
through.
little.
There we go. I thought you guys might appreciate that based on some of the conversations we've had recently about economics. So that's Hayek. And he's like, yeah, Keynes knew very little about economics. So anyways, there you go. So I don't know if you're following up the discussions. Hang on, I'm getting a warning from YouTube. Warning, it's only pulling 163 kilobytes. Why is it doing that? All right. Did they ever debate? Honestly, I don't even know. I would assume, but I don't even know if they're alive at the same time. I think they were. One went to Oxford and the other one went to London School of Economics. But anyways, so I'm pushing enough and pulling enough. I don't know why I'm getting warnings on YouTube. But let me mark the stream, and we'll start this way. 3, 2, 1, hit it! Man, I just got too many windows going. Sorry, I'm trying to move things around. Hey, so let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, good morning. My name is Wayne McDonald. I'm a currency trader just like you. I sat my butt down here about 20 years ago and said, I'm no longer a venture capitalist. I'm a full-time Forex trader. And then, all of a sudden, I'm like, I think I'm drowning. What a leap of faith. But hopefully together, by supporting each other, the leap of faith is off of a curve and not off of off a curb, but not a cliff. So thank you for being here. Thank you for being part of the community. Thank you for subscribing. Thank you for your patience. Thank you for the hard work you put in, the respect you show me every day, and the respect that you show each other every day. I think we have something very good here. What we call Forex.Today is actually, I don't know, makes the world a better place, and I'm proud to be part of it, and I'm glad that you're part of it as well. Recommendations for newer folks: ask questions, get involved, check your negativity at the door. And we haven't seen them for a while, but every once in a while we get like spammers. They're like, hey, I make $40 million a year trading Forex because I got my guru. And then I'm like, well, if you're making $40 million, why are you spamming us with your crap? We're not interested in getting rich quick, yo. This is the Get Rich Close, the Get Rich Slow show. So anyways, take notes, seriously. And then at the end of the webinar, when it's over, wait for the recording or come back for the recording and document what you learned. Write your notes down. What were your key takeaways? And I'm telling you, you're going to force yourself to remember. which is good because if you don't remember what happened 8 days ago, then theoretically, philosophically speaking, if you can't remember 8 days ago, you were not alive 8 days ago. You might have been breathing, but you were not conscious. Okay? So anyways, be a part of it, be involved, force yourself to learn, force yourself to grow. And let me tell you, the secret to successful learning is not just placing a whole bunch of trades and figuring you're going to get better. That's what a lot of golfers do. They figure if they golf once or twice a week, in 30 years they'll be better golfers. Maybe if they upgrade their golf clubs and get better golf clubs, maybe go to better golf courses. Those are all not ways of getting better. If anything, it's a waste of money or you're reinforcing bad habits. So you should really, 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 really focus on learning one very specific thing. Okay? An example of that, if I were going to teach you golf, even if you've been golfing for 15 years and you're like, hey, I can't get much better than whatever, bogey golf, I would start you by checking your balance, and I'd make you for a whole day at least hold the club right. I'd work on your grip. The first thing I would do is work on your grip. What does that mean in Forex? Well, the first thing you need to do is take control of your trading and focus your learning to develop skills, not just placing a bunch of trades. Even an idiot can place a bunch of trades. Doesn't make him a good trader or her a good trader. So anyways, focus, and then ask questions. Okay? Cool. I'd like to thank Traders Way for being part of our community as well. You know, we're traders. We need an execution partner, and Traders Way has exhibited, how do you say it, culture and class. They're concerned about your success. They're concerned about your level of education. They want you to grow your account over time. They want you to succeed. And they're like, hey, you're an educational community and you're supporting. Great. So, hey, become a client to Traders Way when you're ready. Give them an opportunity to earn your loyalty and respect. And right now, sit back and enjoy Forex.Today. Learn as much as you possibly can. And start by opening up a demo account and get some experience. Try an ECN account. Maybe you're new to an ECN account. It's a little bit faster, and instead of paying spreads, you pay commissions. Cool. Right on. So thank you, Traders Way. They, too, want to make the world a better place, so I'm glad to have them on our team, in our community. So how many people thought you would suddenly be thinking about Keynes versus Hayek? And that you would even be watching rap battles about their economic philosophies. Pretty interesting world, huh? Yeah, never thought. Well, that makes you one step smarter than maybe your friends and family, 1% smarter, perhaps on the field of economics. But that's important, though, that you start studying these other things, because remember, one day, when you're all alone and the world is cold, right? One day you will meet with a potential client who could potentially invest into your Forex trading fund or career program, whatever it is. And you only have to be 1% smarter. It's kind of like, right? Because if you're 1% smarter than your client, they're like, wow, you're smarter than me. You should be making these decisions for me. It's the analogy is you're out in the woods with a couple of buddies, and sure enough, you come across an angry bear. Maybe you get in the way between the mother bear and her cubs, and she attacks. You don't have to be faster than the bear. You have to understand that. You just have to be faster than your other friends. You just got to be 1% faster than your buddies. That's all, right? So you don't have to be a genius. You don't have to have a PhD in economics, but you need to at least be 1% smarter than your clients and ideally in an interesting way. If you start talking about, your pivot points or your standard deviations from means, you'll bore the heck out of your clients. But if you can talk about, economic philosophy over the centuries, over dinner, boom. Okay, boom. You got a client. Why? You're interesting. All right, so here we go. Yeah, nice. It's another sort of cold, rainy day here in Georgia, and I keep thinking, man, I want to hang out with Gary in St. Lucia. So, Gary, in the winter, do St. Lucians wake up in the morning and like, man, I wish I was somewhere else? Is there a place where St. Lucians dream of being? They're like, I got to get off this ugly, horrible, boring Caribbean island. And of course, everyone else is like, I wish I was in a beautiful Caribbean island somewhere with nothing to do. Where do St. Lucians dream of? London? Vegas? That's it? Yeah. They're like, why go anywhere? Huh? Yeah. Well, everybody always wants what they don't have, right? So anyways, let's look at these. Thanks, Shug. Let's take a look at some of these things. All right. Yen, ma. Now, here's the interesting thing. I want to revisit because it's part of a learning process. We said if Biden wins, the stock market goes up. If Trump wins, the stock market goes up. And it'll go up to the Friday after the December Fed meeting. And it went up and up and up and up. Pretty lucky guess. Great. Okay. Then we said that's the exact time you need to get out. Get out! Get out! Get out! Get out! Okay? But if you need to really defer your taxes, hang on till maybe the first trading day of 2021 and then get out. Okay? Do what you need to do. Great. So the idea now is when we got back in the first week of January, people would be taking profit, the US dollar would get strong. Well, not on the first day, but the third day, the dollar got strong. Generally speaking, for 2 weeks. Then this week, we said that this week, the third week of January, there should be a rally. Okay? We did get that dollar strength on the third day of trading in 2021. It did last for 2 weeks. And then today, or this week, looks like we've had a nice rally, meaning some dollar weakness. Okay? Now, I could pretend I speak to angels, or I have a crystal ball, or I have some sort of financial alchemy that helps me create this. What I would rather give you is the truth. After 15 years or 20 years, not quite 20, but more than 15, of me doing this, I feel like there's a repeatable pattern. Now, I'm not hoarding it for myself. But I want you to look at it and say, well, if we can talk about these things so casually, but at the same time so specifically, there seems to be something to it. You can therefore learn it, and over time develop the confidence that you'll need to actually carry it out. How many people have gotten to that point where you've got that point? You've understand that even if you didn't trade it this year or last year or the year before, year after year after year, I do these messages, and at some point I want those hammers to fall and things to click and the door to unlock and the opportunity to be revealed. But we have to do this mentally right? So I didn't predict the future for 2021 or the end of 2020. What I did is I said the same thing this year as I said the year before. And the year before I said the same thing I did the year before that. And the year before that I said the same thing. Okay? And sometimes it might take 5 years for the lesson to be learned. But how many people are now sort of aware that there's a message, and just maybe you're starting to buy in? Anybody? Yeah. Yeah. Now, some of you guys are like, yeah, and this year for sure, and so, which is cool because many are newer, meaning you haven't been a member of FX Bootcamp for 10 years, for example, or 5 years. So think of it like, for those that are starting to see it or starting to get it, right? You're jumping 5 years ahead of somebody else. Okay, so maybe the market is tracking it more closely, or maybe I've grown as a coach. Maybe I'm a better coach now than I was 10 years ago. I try. So maybe I'm doing a better job, or it's more obvious or something, right? But my point is, I want you to succeed. I want you to know this. I want you to get this. I believe you can know this. I believe you can get this. And there's another step beyond knowing it, right? You have to do it. And that's the next step. Once you truly, honestly believe in it in your heart, not just your intellect, then you'll change your intellect to align with your heart, and you'll have the courage that you need to do what you believe you need to do. It's not an easy process. Okay? It's not an easy process, even though the ball was teed up for you. You're not going to be able to drive it like Tiger Woods, right? Right? Maybe Tiger Woods with a blown knee and a bad back could probably do better, right? So there's still another process and another journey that you need to go through, and that's experience. But like I said at the beginning, at least you'll have experience doing the right things versus just going out and hit a bunch of slices, 30 years of slicing high to the left. Or sorry, high to the right, high to the right, high to the right. You can have 30 years of experience doing that. It won't make you a better golfer. So I need to frame things so that you have an aha moment, and maybe you remember this 8 weeks from now, 12 weeks from now, maybe. And if you don't remember, then you are not alive right now. So I would fight to live. I'd fight to remember. Okay? Rage against the dying of the light. Cool. So that's that. And of course, the major point is it's not me. There's no enlightenment per se. There's just experience. And I share this with you instead of hoard it as my own alpha. So you better pay it back is what I'm saying. If you make $1 billion, you need to kick down, come clean. When they interview you on CNBC, you could say, oh, well, I had a mentor. Okay. Down, up, down, down. Down, 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 down. Oh, I guess we should talk about the euro weakness. Madame Lagarde says she's pissed off. Oh, have we even done it yet? Has the news come out yet? I think so, right? It was 7:30, wasn't it? If she hasn't said it already, she's going to say it. She's pissed off because the euro's too strong. Now, this is great because she's talking directly to Jay Powell. No, by the way, so I'm looking at EJ's question. Mr. Wayne, in the swing trading room or the live trading, do you teach how to trade or only the swing? Okay. In the swing trading group, so there's two groups. One's one is developed and designed for people that are becoming professional money managers, like literally portfolio managers. And that's a 5-year track. So that's different from my swing trading group. My swing trading group, yes, it focuses on doing trade setups. But then you say, is there any training? Yeah, it's actually an interesting mix, but it's a different form of training because everyone has training videos. So you can watch the videos a million times, and they're like lectures, okay? But when we get together, it's a mix of trading setups by me, trading setups by others, group work, economic discussions like mini lectures, philosophical discussions like good or bad or and that kind of stuff, or history. Or we cover a wide range of things. Okay. But it's not designed to say, hey, dude, skip all the videos. Let's just talk about how to trade a 5-8 cross off of support. It's assumed you've watched all the videos, and that if you haven't mastered things, like you haven't watched the videos 5 times yet, that over the course of time you will. Okay? And then so EJ then says, or the live room. Well, that's the professional track. Imagine that to qualify to get into that group, there's an examination where we track your actual trading, real trades. You have to go open your charts and trade. We give you the setup, and you trade for a month. And if you can't make 10,000 pips in a month, then you fail and you're rejected. Thanks for applying for Harvard, but I'm sorry, we're full. You don't qualify. Okay? It's kind of like that. So the minimal acceptable performance for that group is 10,000 pips in a month. And if you can't do it, you're not ready. You don't know how to trade. So it's kind of my group, and it might take you a year or 2 or 5 or 10, but I work with you so you have a big holistic understanding of fundamentals and technicals and trader psychology, put that together and be able to trade worth a damn. And then I hand you off, and then we teach you how to be a professional and be a portfolio manager and put some logic and strategy behind, how you do versus what you do. Okay? Pretty intense, by the way. The swing trading group's $99 a month. It's nothing. All right. All right. So where do we want to go? I guess let's start on the buck. What's up, Buck? Okay. All the links are in the description below. Okay. All right. And here we go. Angry Lagarde sounds cool. Well, okay, so let me finish that thought. So I don't know if she's done the press conference or not, but she and I talked last night, and she was really pissed at Jay. So I'm like, whoa. So what she's going to try to do is weaken the value of the euro. Now, it seems like it's recovered a lot in the last little bit. So maybe the conference... Did it happen yet? I'm sorry. I wonder if it's even on the calendar. Forex.Today. Oh, she's doing it now. Just a freight train coming your way. Yeah, it's now though, right? Yeah. So anyways... she, aka the governing board, the governing council of the European Central Bank, they're going to start talking about weakening the euro. Nice. And it's going to be a battle for them because the dollar's going to weaken. So euro dollar may not be the best for you to be trading in 2021, if that is the case. Okay? You get me? Wink, wink, nudge, nudge. What did you just say? Write that down. We have policies already in place at the Fed that will weaken the value of the dollar. The ECB is finally going to actually try to do something. The last policy ever initiated by the ECB was set by Draghi. And Mario Draghi said, we plan on doing less, but for longer. I just love that. So now, like, Lagarde is saying, okay. First of all, she's glad Trump is gone. Great. And now the second thing is, boom, let's weaken this euro. We got to do something. And so if she puts some policy behind that, we'll have a neutral euro dollar. Now, euro dollar probably still will go up because the Fed is more powerful. It's a reserve currency and stuff. But if euro dollar goes up, something else will probably go up more. You see where I'm getting at? So I'm sort of bullishly neutral if that's the case. So we'll see what Chrissy says. Yeah, actually, I don't know what you're talking about, Guala, but that is a liftoff for euro typically. So I don't know what event you're talking about, but there are many events, and that could be So right. So I don't know what the event is, but I generally agree with you. But it may not be. There might not be as much liftoff this year than typical. So you'll have to find a replacement. Okay. So Aussie might be better. Yeah. Maybe, right? I mean, that's for you to decide. That's your alpha, baby. So what do we know? So I threw out a lot there. A lot of that is fundamentals, which is a framework, but it doesn't put you into a trade yet. It sets the strategy of your trading. So we can go back and say, okay, that's well and good, but what do we know now? Let's go away from theory and let's look at practice, right? Okay, good. I'm with you. What we know is that is the monthly buying pivot. And with that in mind, we're going to this zone here. All of that's just straight up facts. Now, if you were a bear, you would sell it at this price or at this price. Okay? And that's that. So here's the interesting thing about trading properly. Like a man, not a boy. Okay? When you look at like buy zones and sell zones, if you just do your frickin' job, you're a buyer where buyers are supposed to buy. You're a seller where sellers are going to sell. We don't know if we're going to be up. Let me move this. We don't know yet if we're going to be here next week or down here next week. And bears think we're going to be down here. Bulls think. See, like lots of people are convinced this is bearish, right? Why are they convinced? Well, it's been bearish since the Friday after the Fed meeting back in December, which I called. High fives, by the way. Called out 6, 7, 8, 10, 12 weeks in advance. Great. But we also called this up 10, 12, 14, 16 weeks in advance. So bears that are just doing what we did the last 6 weeks, they're not on the clue train and they might be wrong this week. Right? Sucks for them. So maybe this week we do go up here. But that's my alpha. I don't know if that's true. Right? So here's the interesting thing. Bears think this, and they might be right. I don't know if I'm right. Okay? And bulls are thinking this. They might be right. I don't know. I don't know. But one of those two things are very, very likely to happen. Okay? Forex Squala says there's a big thing going on back in March regarding, the power of the European Central Council and all that kind of stuff. Yeah, all very nice news stuff. It's not likely to change the fundamentals. It makes things complicated for Europe, but it's not going to change whether an American's deciding to buy a BMW, right? You see what I mean? So unless it changes consumer behavior or business investment, it doesn't matter. It matters to, the PhDs in their Ivy Tower and their politicians that like to bitch and complain while they smoke cigarettes and drink wine. Okay? It matters, but not to the real world. Most people on our planet will make a decision based on, whether it'll make, I don't know, personal power of some sort, right? They're like, wait, I'm going to buy this Porsche because it's going to make pretty girls want to date me. That's the decision most people make. Okay? And they're going to say, oh, wait, yeah, I like pretty girls and I want them to like me, and I think this Porsche is going to make me more attractive in the eyes of pretty girls, which doesn't make any sense, but that's what boys think. And then you're like, wait, but that whole thing between the Dutch and the European Central Council, right? You're like, oh, dude. So I know where you're going. You're totally right. But that's newsworthy, but it's not fundamentals yet unless it actually makes a policy change. Okay? Cameron says, Wayne, do you yoga or meditate? I meditate every day for almost 20 years. Okay? I almost got in trouble today because when I meditate, I lose time. So I sit down to meditate and I think, okay, I'm going to knock this out in 15 or 20 minutes, and like an hour and a half will go by. And then I'm like, oh, snap. Okay. So anyways, so Guala, you're doing the right thing. Like, I'm not saying it's meaningless, but as far as trading and making money, okay, like you need to watch that as an analyst. But as a trader, it won't matter until somebody changes their behavior. When Americans say, I want to buy this Porsche, but look at this whole thing between the Dutch and the ECB, I'm going to defer my decision till next year. Okay? And that's not likely to happen anytime soon. People is stupid. No, sorry. Ooh. I don't want to say that anymore. So, I forgot. I have bad habits, I guess. People is smart. That it's the same thing. It's just not as negative, but it's still super funny. Right? It's still funny. People is smart. They'll make the best decision they're capable of. Which is usually a bad decision. So anyways. So there we go. So my point here, okay, let me wrap this up. We're likely to either be here or here sometime next week. And if you just do your job, you'll either be right or wrong. If you're a bull, you'll make money. Okay? And if you're a bear, you'll either lose money or not make money. But the math will work out in the end. If you're wrong and you lose 33 pips, or let's switch this out. Okay, if you're wrong, so let's say you're a bear this week. It makes sense to me. Except I, 16 weeks ago, 26 weeks ago, 36 weeks ago, said this week we will be up here. So let's say I'm right this week and the bears are wrong because they're still doing this. That's fine. I don't know everything. Right? Right? That's just this week, that's my alpha. So maybe I'm right this week, and maybe it's for random reasons. Great, doesn't even matter. Okay? So if you're a bear now and you don't have that alpha and you lose, let's say, 55 pips on this swing trade. Well, when you swing trade, if your average is, what do you want to do? 150? Okay? If your average win is 150 and this week you sell up here and you're wrong and you lose 55, it's irrelevant. Even if you're a 50-50 trader, which I don't think is really that possible. If you're a 50-50 trader, you're probably bullish and bearish and bullish and bearish and you're all over the place. Because if you think of the definition of a trend, because I'm trading you to be a fundamental trend trader, the definition of a trend is that it moves more in one direction than the other. So like, how do you 50-50 that? Well, you're trading both ways. You're swinging both ways like a broken gate. And on the long run, it'll probably lead to mediocrity. If you're a bear here and you do a sell here, okay, so you made money here, you made money here, you made money here, and you lost money here, but you're going to lose less than you win and lose less than you win. And you're going to lose less than you win, right? Right, so anyways, so let's say in these 3 weeks you made 500 pips and now you lose a 50 pip, okay? All right, so you gave back 10%, you're still holding 90. And there'll always be a turn. It's okay if you can keep 90% of your profits, okay? But if you're all over the place, you're going to give back 50% of your profits and you'll be all over, right? So if you are a trend trader because you've analyzed fundamentals and then you said, I believe this is going to be bearish, or I believe this is going to be a bullish, then the next part of the equation is, are market conditions favorable for being a bear? And you make a decision. You're like, yeah, I love double bottoms with higher highs. I think I'll sell that. You see the problem? Cameron says, what amount is good to start trading with? It's irrelevant. Irrelevant. It's irrelevant. Because you're like, what if I don't got no money? Well, the math is going to be the same. So just get out an Excel spreadsheet. And, you know, we live in a world, too, where I have no sympathy for people. I'm sorry. I have some sympathy. Maybe it's more like empathy, but I don't even know. I've always told everybody, I fake empathy. Okay? I really don't have any empathy. I'm trying to have empathy, but I don't think I really do in most cases. If somebody says to me, well, Wayne, I don't know Excel. Do you know, like, if you go on edX, you could probably take a college-level course on using Microsoft Excel. It'd probably cost you $5. Or you could just sit on YouTube for 100 hours and learn, right? And learn Excel. So you're like, so if I say bust out a spreadsheet and let's do the math, and you're like, I don't know Excel. Why is that relevant? Learn it. Well, I don't got no money. Well, you probably have $5, and if you don't have $5, you can do it on YouTube. And then you're like, well, I don't want to spend 100 hours learning Excel. Well, there you go. Now we got the heart of it, right? People are either unwilling or incapable of their success. They deprive themselves of their own success. Right? So if I say bust out an Excel spreadsheet, and you're like, good, well, spend 3 months learning Excel. I don't even think it'll take that long. You probably do it in 3 days, but whatever, right? So bust it out and you look at some variables. Okay? First of all, you have to do this. Year one, oh man, Hang on. What am I doing? There's so much going on, so much confusion. So you start with like this. Okay. So you go year. Okay. 0, that's where you start. 1 year later, 2, 3, 4, 5. Okay? So the first thing you start with is assets under management, AUM. So you start out with the variable X. Okay? Now what? Leverage, let's say. Okay. Now, some people say that that's like 100 to 1. Not really. You could have 1,000 to 1. You could have 10 to 1. It's your lot size relative to your account size. So you figure that out. And once again, that's sort of math. You just figure it out. Find the lot size. Okay. So I'm going to change this now to lots. Okay. So if your assets under management allow you to trade, 1 mini lot, then we got that defined. Right? And then from that, what is your average return? $2 a month? You say, well, Wayne, 2% a month sounds horrible. If you average 2% a month, average, you are the #1 commodities trading advisor in the United States. The absolute best, the pinnacle, the peak of the peak. Summa. Right? Latin for peak, summa cum laude. Okay, you are the #1. Better than the best, best believe you're the baddest. So you're like, Wayne, I'm doing 12% a month. You might be over leveraged relative to your AUM, too many lots. Okay, so anyways, so what you do is you say, okay, so if you change X, does it change anything? What does it change? Changes nothing risk-wise. If one person starts with $1,000, another person starts with $10,000, and another starts with $100,000, at the end of year 5, you'll get the same number. The growth of the AUM at this rate. So you're like, what's the right amount to start with? Okay. Why? It's irrelevant. You're going to get the same number relative to your start. So if you got $1,000, okay, so let's try to do some math here. Let's change this. Okay, let's say because you're starting with a small amount, you're able to do 6% a month because your lot size is too large for your AUM. But you're starting with a small lot size or a small account size, so somehow it all works out, okay? But what this math does is allows you to do this. Because it's compounded, in year 1, you have double. In year 2, it's doubled. In year 3, it's doubled. So if you start with $1,000, at the end of 5 years, you'll have $32,000. If you start with $100,000, you'll have $3.2 million. But the risk is exactly the same. Your lot size is different, but relative to your account, it's the same amount of risk. So risk is constant. Okay? And if you only do 3, then it's half that, 1x, 2x, 8x, and so you'll end up with $16,000 from year 1. So these are the variables you work with. What's your average return over time? And it'll show you the growth. Is it 3%? Whatever, right? So what I teach you, and it covers it very specifically in my book, what I did when I did my business planning retreat is I created this Excel spreadsheet for myself, and I realized I don't need 32x every 5 years. So what I did is, for example, if I started one lot, I guess I should have kept it there. If I stayed with one lot as my AUM grew, okay, from, let's say, 1x to 2x, okay, my lot size, let's say at 0.1, would be 0.1. And then it would grow from 2x to 3x, and no, I guess I wouldn't quite do 1.25, let's say. And then 3x, even then, wait. So 10 to 20. What I'm trying to declare, because if I make this 1.5, it's still half, which was this of this. So I think what I would, so for example, let's try to make this clear. If it was constant, I can't remember the constant symbol, 1x to 2x would allow me to have 2, 3, right? And I think what I'm trying to get to is I would get to 0.2, so low. So if I doubled the account, I would not double the lot size. So from 1 to 2, instead of 2, I'd have 0.5. And then it's 3, I might leave it at 0.5 or maybe 2 or whatever. And I know I'm not expressing it well, except as the account size grew, I would grow my lot size smaller than the change in AUM. A fancy way of saying that is over the course of time, my account would grow like this, but my risk would grow like this. The lot size would grow slower than the account size because the prime concern wasn't to make as much money as I could make. The prime concern was lower my risk per trade. And then instead, focus on things like consistency and focus on things like letting the winners run. But not jack up the risk. In fact, lower the risk over time. Okay? So that's a big part of my book is dedicated to that philosophy of growing your AUM, lowering your lot size. And then I tried to figure out, well, how do I do that but maintain earning money as a trader? And that's where I figured out by doing math again. I did the math and I found out the less I paid myself, the more money I made. So I focused on that. And you're like, wait, that doesn't make sense. Well, read the damn book. But it matters, is what I'm saying. Okay? Okay? It matters. There's ways to do better, and very often it's not the way you think it is. Okay. So let's move on to this. Where are we going? Nowhere. Ba 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 ba. So let me talk this out. If you're a bull, the buy was earlier in the week, and you would have jammed your stop already around 76, maybe 77. So at least 50 pips ago, you jammed your stop, and there's nothing left for you to do. And I'll take that same concept. Bulls do what bulls do, bears do what bears do, and both are profitable at the end of the year. Amateurs that don't know which team they're on lose money consistently. Okay? All right. So if you're a bull, you'd buy here. Okay? That's that. Now, if you're a bear, okay, you're thinking this. So now you're getting ready to sell. And really, you're getting ready to sell it off of next week's trade. Very interesting. So there's nothing more for bulls to do except move your stop to break even. Bears are getting ready because they think there's going to be a rollover. Now, there's two places for it to roll over. Here, and then the higher one, double top. That, or triple top even, you can call it, right? And that's the scarier one. And then you got this sort of, you got this area of sort of nomad's land. Okay. So, yeah, and somebody's right. Okay. Bulls are taking it up here. And they'll give you lots of arguments. The Fed policy, the expected fiscal policy out of the Biden administration. Okay. The news that was reported out of China over the weekend. Pretty good news. Pretty good. So you made a decision. You're long. You bought it off the 21. That's what the 21 is for crying out loud. So that's what they did. Now we're above 77. They've jammed their stop. They have an opportunity cost risk of about 50 pips. And they're going to let it run. And they say, well, we'll get through this nonsense either this week or next week. And they're done. Like, you have to understand, they're done this week and they're probably done next week. They might make trades weekly or a couple of times a month. Okay? And that's that. Bears have much more work to do. It's going to be a struggle because, by definition, the market on the daily is bullish, and the speed of the market, again, borrowing from my book, right, is bullish and aggressive. Okay? Based on the rules of engagement I teach, this is aggressively bullish. Is there two? Aggressively. Okay? So you got more work to do if you're a bear and you're aggressively selling a bull trend. Maybe you want to do that, maybe you don't want to do it, right? Oh, Wayne, I'm contrarian. Okay, great. So you need to make these decisions ahead of time. There's no way you're going to be able to do it on the fly. Okay? Okay. So, for example, you see this 1, 2, 3 day move. That's what I predicted 16 weeks in advance. So, let's talk about that. Clearly, somebody else had the same plan. But then it dropped here, and guess what? Those that took profit already knew they wanted to take profit up there when we were here. You have to understand that. That's why they're called smart money. But they also had a plan of buy the dip. And they did. That's also called smart money. And what do amateurs do? They didn't see this, they didn't see that, they don't ride this, they sell that, and then they buy that, and then they sell that, and then they're here, and then they're all over. It's just a ginormous mess. But think of it, a bull, and a bull, and a bull, and a bull, okay? And a bull, that's supposed to be sideways, by the way. They're just making very logical decisions. If they didn't buy this, then they definitely bought that, and they definitely bought that, right? And they definitely bought that, and they definitely bought that, and this is a whole buy zone off the 21. These are definite, clear, organized, well thought out, strategic and tactical trade plans. And all they had to do is say they were bulls on the Aussie dollar. There's no more brilliance than that. Okay? No, that would not be a waste. Okay, so Thomas, you wouldn't be involved in the group work, but the interesting thing is the way that you would see it as a video is I would set up the group work, and then I pause the recording, and then all of a sudden, boom, all right, we're coming back, and all the people come back, and you start to see them talk about their team analysis, what the group came up with, and then we go through their charts and they explain and I ask questions, and you can put yourself in their shoes where you're going, you can see their own strengths and weaknesses, and I'm sure you can at least empathize, right? Or understand and say, oh, okay, that's where I was going, and oh, he made an interesting point. Oh, yeah, I didn't think of that too, or oh, that guy is missing something, right? I would, but don't ask me, right? Because I'm at every meeting. But I think it would help. Yeah. Because there's a lot of questions that get answered on topic and off topic too. So anyways. All right. So going back to this, guys, can you see that if you had simply said at some point in life, and I mean, this could have been June, you made a decision that you are only buying Aussie dollar. You have a reason for being. And you're like, okay, support. Okay, this is the front run of the election. This is the second chance after the election. Okay, now you just use price action. Up, 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 down, down, buy, right? Up, 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 down, down, buy. Up, 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 down, down, buy. You're just, I mean, why does it have to be more complicated than that? What happens is you guys get caught up in this, which is fine, but it's been going up for, 12 weeks, and you're like, well, for the last 2 weeks it hasn't done anything. Well, come on. Okay? Okay? I think if you do all your work on a 15-minute chart, you're going to find out that you're walking in circles. Let me tell you about heartache and the loss of God, wandering in hopeless night. Okay? I love the 15-minute chart, but not to make decisions. If I'm on the 15-minute chart, my finger's on the trigger. I have permission to engage. Okay? Forex says it's also hard to generate the buy idea. It can be. But I've recommended for years and years and years and years and years and years and years, if you just flip a coin, it's good enough. Now, when your coin flip is correct and you say bullish, you'll have a lot of opportunities, okay? You'll buy, you'll buy, you'll buy, you'll buy, you'll buy, and so on and so forth, okay? If you flip the coin and you're a bear, and I don't mean on all pairs, this pair, or you're a buyer of the dollar, let's put it that way, okay? It's even better if you just say, okay, you're a dollar bull, which means you'd sell this. Well, there's always going to be something weak, okay? Like, you'll do at least mediocre when you're wrong, because you'll find out if you look up here, there was resistance here. And, these are, like, you could be profitable for 4 days. You could be profitable for 4 days. You could be profitable for a couple of days. You could be profitable for 4 days. If you sold up into here, I mean, it dropped for 3 days. Well, this is the one I predicted, right? So 3-4 days, you're making money here. Like, you forget these are daily candles, right? Look, you were correct for a week, took profit, came up, then you were correct for a week, took profit, and now you're getting ready to do this. And we don't know the future, okay? That's the whole point. We don't know the future, right? That was predictable, and this is also predictable. We just don't know if it's going to happen. And if you get that right, the week after is probably going to be right, okay? But you'll miss it if you don't make a decision. Okay? You got to be right some of the time. And when you're right, you got to let your winners run. If you don't make a decision, you'll always be late. You won't see it coming because you're looking behind you all the time. because you're already in a mediocre trade. So like one of the things, like I tell you that you should take pride in your losses. Okay? Because if you do this and you buy the dip and then it does this and you're staring at this, there's a couple of things. One, well, if you'd done your work properly, you might have been selling it and making money, yet you're nursing this loss and it keeps making lower highs and lower lows and you're still feeling, right? And you're just not doing your job. You're sitting on a trade for some reason. I don't know. You have to get past that psychology. I can't take a loss. I'm only down 50 pips. I'm only down 100 pips. Now I'm down 150 pips and it's too big. I can't take a loss. And meanwhile, you could have just taken the loss and gone on the clue train. Okay? And that's in the situation of chasing price. The other way of doing it is if you're a bull and you buy and then things change, you're out and you wait for the next bullishness. And the thing is, now you have consistency. The consistency is almost more important than your profitability. Okay? So Cameron says, do you take pride in blowing your account? Well, the only way you can blow up your account when you take pride in your losses is if you consistently lose always. Now, there must be something wrong with you if you keep buying in a downtrend. Something horribly wrong, especially if they lead to losses. Like you can buy in a downtrend, but don't be aggressive and jam your stop. But if you constantly buy in a downtrend or constantly sell in an uptrend and you don't get your stop to break even, it's because you're not doing it right. You don't even know how to sell properly. And we can fix that problem. We can fix that. Okay? But if you're losing two-thirds of the time, right? If you lose 66% of the time, just stop trading. I mean, think about how really difficult it is. If you're a bull on Aussie dollar, the first thing you ask yourself, is this bullish? It just made a higher high. Great. If you can't make that decision, then you don't know what you're doing and you need to come to a full stop and you need to learn, okay? But if you say, well, I am a bull and this did make a higher high, then what you have to do, is wait for the higher low, typically on a roll reversal. This is like brain dead easy. Higher high, higher low, kicking off the roll reversal, right, and off the 21. And then you can do this all day, every day. It's redonkulously easy, right? Up, 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 down, down, buy. Look, a whole week. Somebody bought it low. Well, that's what you do. Up, 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 down, down. Look, somebody bought it low. Up, 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 down, down, right? Buy. And they're all roll reversals. It's stupid easy. Up, 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 down, down, roll reversal, buy. Okay? Up, 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 down, down, roll reversal, buy. Up, 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 down, down. And now we get caught in this. So now it's complicated. But by the way, we expected that to happen. We talked about this 16 weeks in advance. Okay? And now we got this. So you probably came to a full stop and then reset off the daily 21. Not complicated unless you're not doing the job. Okay? 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 If you're not doing the job, if you're not doing the analysis, I mean, it's a form of betting or guessing, but I guess it's the same thing. Okay? So, if I struck a nerve with somebody, good. What do you do next? You can hate me or you can take control. Because if you lost money because you don't know what the heck you're doing, then why would you risk money? Like, it doesn't make any sense to me. You don't know what's going on, but you're going to risk money. Why? Stop it. Okay? I traded on a demo account for 2 years. If you don't know what you're doing, I don't understand. Like, seriously, why would you risk money when you don't know what you're doing? Because you're almost certainly going to lose. It just doesn't make sense. Okay? When you have skill, you're like, I can win. I can compete. Okay? There's a reason why I don't play professional basketball. Okay? Too old, too short, no vertical jump. Okay? I'm not going to compete. So I don't play the game. So when I was ready to compete with Forex, boom. I was ready to go. 2 years of practice. Right? 2 years of practice. And then I'm like, I'm going to start using real money. And then I got to a point where I have to quit my job or quit trading Forex because I cannot be mediocre at one of these things. But I trade when I'm certain, 100% certain I will make money. Okay? There was a saying that I did 20 years ago, 15 years ago, whatever. I said, you do not get paid to trade. Brokers get paid from trading. So what is your job then? If you don't get paid to trade, what do you get paid for? Where's your worth? Where's the value creation? Because remember, people pay you for your value. So what's your value creation? If it's not trading, what is it? No, like more specifically than that. Jim, that's a philosophical question or a response. I'm fine, but that's not the answer. Like literally, what do you get paid for? You earn 20% of what? Waiting? What do you earn? Why do people pay you money? They don't pay you. You can be consistently losing money. They're not going to pay you for that. They're not going to pay you for your education. They don't care that you went to Harvard or Cambridge Community College. Profit. Thank you. Profit. You get 20% of the profit, not 20% of the patience. If you want to get paid for patience, get a doctor's degree. Okay? You get paid to profit. So, why the heck would you invest money if you were not certain you would make a profit? It doesn't make any logical sense to like, well, let's try this one. Oh, I think this will go. Oh, yeah, well, you know, the MACD told me so. I'm like, what does that mean? If you pull the trigger when you know you're going to make money. And then manage the risk. Okay? So there's no guesswork. Oh, Bitcoin just dropped $8,000. I think I should sell it. What the hell are you doing? It dropped 8,000 and now you think you want to sell it? What is that? Selling high? It just dropped 8,000. Okay? Michael, yeah, that's why you're here, so I'm cool with that. The other thing, join fxbootcamp.com. But that's why we're here. So most people here know all the methodology. So the methodology here, Mikhail, is this means we're bullish. This means we're bullishly aggressive. And bulls expect us to be up here in the future. Okay? So if you are fundamentally bullish, Mikhail, then your job is to buy dips. And there are plenty of dips. Okay? Now this is on a daily chart, and one of my points is People buy up here and lose money. People buy up here and lose money. People buy up here and lose money. Because they wait for it to go up and then they buy it. That's the dumbest thing you could do. So I train over and over, day after day, week after week, month after month, year after year, decade after decade. I train you to see the up. And then I say, don't do it. Wait for the pullback. Now, right? Buy it now. Don't buy the high, buy the low. 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 Buy low. Yeah. Okay? Well, so, Mikhail, change so you're reflecting this. If you're above the 21 on the daily, you're only a buyer. And if you're not at support, you don't buy. It's not more complicated than that. Is this an uptrend or a downtrend? Up. Good. Buy dips. Okay? And then you can add even better levels, right? You can get even better than this. But I'm trying to show you, I think most people that are struggling don't even have this level of analysis. They don't even know Aussie dollar's going up. And I'm like, I can't even imagine why. Why not, right? But anyways, there's something going on here. Then I just showed you how to use the moving averages. Great. Okay, so my book, for example, says after the 21.55, buy the 5A cross up, which I think is here, and then take profit. And then here's the new one, 3 days later, and up, take profit. And now we just add a new one. Okay, that's simple. It's in a book, wrote it well over 10 years ago. What's another thing, right? The price action part, up, 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 up. Okay, you buy the roll reversal. Okay, and you can see over and over and over and over and over and over. But they're weeklies. So again, people buy here, lose 60 pips, and they're out. Then they buy up here and lose 60 pips, right? They're buying at the wrong place, and that's the problem. You need to buy here. You need to buy here. You need to buy here. You need to buy here, right? Up, 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 up. Okay, look, this one didn't even make a lower low. Up, 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 up. Okay, now the next part that I'm trying to teach you is even this exit is predictable. Imagine now if you can do the first part and then you can predict 16 weeks in advance that that's going to be a top. Then you'd improve even better. Okay, what if you knew 16 weeks in advance there's going to be downward pressure this week? You would have changed your behavior, right? And what would you be doing? Well, the first thing you do, Mikhail, is you say, am I still a long-term bull on Aussie dollar? Do I think Aussie dollar is going to be higher at the end of 2021? I asked all these questions in the live group, right? In the swing group. And everybody said yes. Cool. So what would you do here? You would buy it off the 21. That could be the low for 2021. I don't think so. I think bears will have their day. I think we'll drop down into here, but you still have to do your job. If you're a bull and you don't buy it off this dynamic level of support, then you're not a bull. Okay? Okay? This zone here. If you don't buy it there, you're probably not a bull. Okay? Now your one risk on this chart is this zone here. So I know that because I know where bears are going to sell before they've even done it. Some bears want to sell here. Other bears want to sell here. So I'll make this whole thing a zone. And if they're right, if they actually sell it, we'll be down here. Well, whoever bought at the 21, they're not going to lose any money. You see? So you can be a bull, but you only buy red candles. You love red candles. Okay? This stuff here is behavioral and part of seasonality, because that's really what seasonality is, right? There are forces in the universe that make humans behave in a logical pattern. Okay? So most people are just a disaster, right, Mikhail? Most people, when I say, give me your trade history for the last 3 years, and I open up your trade history, you're like, Wayne, I've been watching you for 2 years and I'm just not profitable. Then I look at your trading, it's probably a disaster. Now, I'm not picking on you. I'm saying the aggregate. I don't think anyone has ever actually handed me their trade history and I'm impressed, right? Like, it's usually a disaster. Okay? But if I see since December you made 100 trades on Aussie dollar all long at support, then I'm like, oh, I know what you're doing. But it's rarely that clear. Okay? And most people miss it because on a 15-minute chart, you have to understand this was down for 4 days. So now you're convinced. You're convinced it's bearish. That's the funny thing, right? I mean, it's funny, isn't it? You're like, I made a decision fundamentally that Aussie dollar will be higher 12 months from now. So couldn't you just buy it and be done? That's how wealth managers behave. They buy it and now they're done for the year. Well, how do you make that decision? It's called fundamental analysis. You might not know it, but ultimately, it's not that complicated. You can go and get a university degree in economics, and that would help. That's only 4 years. It's only 4 years. What's the big deal? Oh, I got a wife, I got kids, I got a job. Okay, great. Well, I did it. You can do it. Okay? So I know that can be solved too. And by the way, you can go online now, edX, and get an economics degree. Probably cost you $5 per class. You probably only need 20 classes. I mean, $100 gets you an economics degree, right? So it can be done. It's never been easier. It's your success, guys, has never been easier. You have so many resources now that didn't exist 20 years ago. This is the best time for you to grow. Okay? So some people trade like that where you just buy it. And then others, right? This is swing trading, by the way. If you know what swing trading is, swing trading says recognize the higher high, buy the dip. Okay? Whether it's this one or this one. Okay? So what you'll see the difference is, these, like where I'm pointing now, these moves here, those are weekly swing trades. And then the big move, kind of where I am to here, it's actually this to here, those are the position trades. We cover that in our group. There are position trades, right? And there are swing trades. And then there are day trades. So now you can go in there and say, so the pink is a swing, is a position trade. Then this process here, okay, these are swing trades. And then inside of all of that, you have day trades. And some of them are going to look attractive to you and some are not. So you could, let's say you could have, 16 day trades. No, that's probably too many. Let's say you have 12 day trades a month, plus 2 or 3 swing trades a month, plus 1 swing per month, just on this. So you're almost, it almost adds up to 20 trades in a month. Total. Some are worth 100 pips, some are worth 500 pips. Okay? But again, when people are not profitable, usually there's no logic behind what they're doing. Logically, if there's a strategy based on some analysis, right? And you consistently trade based on your analysis. And by strategy, I don't mean how you do what you do. Don't think like strategy is Elliott Wave. Don't think that strategy is using an RSI combined with a MACD or a stochastics, or you use GAN fans or whatever. None of that. Those are just tools. Okay? You can go to Home Depot and buy a kit of 110 tools for $59. You get the hammer, you get the monkey wrenches, the screwdrivers, right? You get everything. Every wrench you could possibly need in metric and in standard. Doesn't make you a mechanic, doesn't make you a a contractor, doesn't make you an engineer. You're not going to build a house. Look, you're going to do your electrical. Oh, you're going to do your plumbing. You don't know jack. All those things are tools. Right? So what I mean by strategy is I say, what are you going to do this year? What's your outlook for Aussie dollar? And you're like, I have no idea. I said, there's your problem right there. I just figured you out. You're like, well, what do you mean? You don't know what you're doing. No, I'm really good at MACD. I'm really good at stochastics. I'm the best Elliott wave person you've ever met. Yeah, but you don't know what you're doing. You have great technique, but you don't know what you're doing. You don't know what to do. You don't even know why you're doing it. You're like, well, I have to do it because this is a C correction wave, so the next one's got to be a 1. Oh my gourd. Really? Lost. Okay? Must have been a great course, though, whatever you paid for. Okay? You need to understand why. If you don't know why, it ain't going to happen. Okay? So, if you simplify, you think Aussie dollar is going to go up because it's your China bet. You guys remember what month did I say Aussie dollar could be your China bet on recovery in China over the next several years? That was like May, June, maybe? Mikhail says, how can you be so sure? I did the work. Now, I could be wrong. I don't believe so. I'm 100% certain. And I'll be shocked if I'm wrong because I've done more work than anyone else is willing or capable of doing. Now, here's the thing. That doesn't make me money, but I know what I'm going to do and I know why I'm going to do it. And even if it's a false confidence, a false positive, it still gives me the strength to do what I think I want to do. Okay? Now, the second thing is I open up my charts. None of this has anything to do with charts. Who cares? Okay? I open up my chart, and the next question is the market bullish or bearish? If it's bearish, not good conditions for a bull. I better back the heck up. And if I do place a trade, I should have very little confidence in it. I got to manage my risk appropriately, and I will not take a big loss. Completely incapable of taking a big loss. I'm getting ready to kill. I'm a wolf, and I'm hungry, and I got puppies to feed. Okay? Okay? So if you're a wolf too, and you got puppies too, and you've done that work, and you know you're a bull, you're absolutely 100% confident in that. And the market is bullish. You're 100% convinced of that because you use technical analysis. And then you find you're at support. You are ready, willing, and able. You will kill tonight. There will be blood on the streets. It'll be because of you, but it ain't your blood. You are going to eat and feed your children. So now I drop into that 15-minute chart. Yep, it's going to be New York Open. Maybe it's going to be London Open. Maybe it's going to be Shanghai Open. But now you're ready, willing, and able. You're the wolf. You're going out. Okay? You're the lion walking into the grass. You're the sniper adjusting your scope. There's no discussion of of morality. You are going to kill, and you never miss. You never miss. You know how many years you put into learning how to be a sniper? You got this. There's no way you're going to miss. You don't even think, it doesn't even occur to you that you could. You are going to put ammo into that target, and that's that. So when I go to kill, I'm hitting this target. I will not miss. Now, if I make a mistake, it will look like this. So let me make this a little thinner. So I buy this, let's say. Okay, you see this part? I buy here off the daily 21. How much money will I lose if it does this? Come on, drawing tool. How much money will I lose if it does this? Thanks, K-Dog. How much money am I going to lose if it does this? 0. None. Okay? So, if you trade like that, you will be successful. I don't even care if your reasons are right. Yeah, thank you, CJ. Maybe 3. I might pull, like, if I'm up, I guess I'm only up, I'd be probably close to 100 pips by now. But, yeah, I mean, I might take 50 off that one. Okay? It's got to pay for the day or something, right? But, you have to understand, if you trade like that, you will be successful even when you're wrong on this idea. You think this is up and it goes down. At the end of the year, you will be correct. If you're that disciplined being wrong, imagine how disciplined you're being right. Now, what are the cliches that every single trader falls into? You take massive losses, and then as soon as you hit 100 pips, you take profit. Oh my God, I made 100 pips. Get out. But you'll ride a 200 pip trade, a negative 200 pip trade, right? You'll stay in the losing trade for days if possible, instead of actually taking the loss when it was 50 and find 3 other good trades to be on. Right? If you lose 50 pips for every 300 you make, whether it's 1 trade or 3 trades, so think about it this way. If your trading looks like this, negative 50 plus 100 plus 100 plus 100, negative 50 plus 100 plus 100 kind of thing, like, it's all mathematics. Like, you should have no problem taking the loss. And what do I mean by the negative 50 plus 100? Well, if you know technically you're wrong and you just get out, now the interesting thing is you can get on a new trade that makes more sense, or because the relative strength might have changed, or you might have missed a pivot or something, but then you get on a new, fresh trade with that same hardcore analysis. You take this, get rid of that, and then you move on, and of course this one works. It's a better trade. Conditions change. You just got a better setup. Where other people will sit on this negative 50 and watch it go to negative 100. Meanwhile, I took the negative 50 and now I'm up plus 100. And then if you don't do that, then very often this turns into negative 200. Meanwhile, I'm on the second and third and I'm up. So now I'm up 250 and you're down 200. And we might have the same opinions. That's what I mean. Like, if your technical setup is wrong, you failed today, get out. Don't worry about it. Who cares? You have 365 days to get it correct. Even if you're a 50-50 trader, if you have proper trading habits, you will be profitable. You're a mediocre in execution, but because the math works out, so your average loser is a 50 and your average, not 500. Your average loser is a 50, but your average winner is a 150. Or your average loser is a 33 and your average winner is a 99, because this is day trading, this is swing trading. If your average loser is 100, but your average winner is 300, at 50-50, you're massively profitable. But if you're not doing that, it ain't going to happen. Total failure. It will not work. Delusional. Right? Steroids will make me a better athlete. What? The math won't work out if you do it this way, right? I'll take Ritalin. It'll make me smarter. Wrong. You're going the wrong way. It's not about cheating. It's about having real logic and intelligence behind your trading. So if I looked at your trading, I want to see Aussie long versus dollar over and over and go over and over. And then I'll say, well, why did you bail out here completely? oh, well, after that Fed meeting, there's some seasonality of profit taking. So what I want to do is wait till the third week of January and then start buying back in cautiously. Holy crap. That's super intelligent, right? Yeah, but that's what I've been coaching you over and over and over and over and over and over and over again. And what I should see is losses are like negative 33, negative 33, negative 50, negative 33, negative, even if it's 150, I don't care, negative 33. And so someone might say, well, what happened here? Oh, that was a position trade. Okay. What is this? Oh, that was a swing trade. What are all these? Oh, those are day trades. They all failed. All these ideas set up beautifully based on my analysis just didn't work out. But then I see a bunch of these. You see? I'm like, oh my God, your average loser is 62.8 pips, but your average winner is 197. And you win 60% of the time, and 40% of the time you lose. You are an amazing trader. And they're all Aussie dollar long or not Aussie, right? Whatever. And the cool thing is, once you get this and you have that kind of analysis behind you guys, let me tell you the next thing that's going to make you ridiculously successful. But you have to be able to do this. A, the analysis. B, the conviction to follow the analysis. C, the patience and discipline simply to buy high or buy low or sell high. What's the next one? The next point is, if you got this Aussie dollar long, you probably got this long. You probably got this long. Okay? You're multiplying now. Because if you can do this, you know you can do these other ones, right? And you maintain the same strategies, the same patience, the same discipline. Almost every trade and every loss will be the same day, and you'll still have the 60% win rate. But instead of like your, what did I say, 179 pip average winner, it'll be, instead of times 60 trades, it'll be times 180 trades. You're not doing anything different, any different work, different analysis. You're trading the correlation. Same seasonality, same reason, same raison d'etre, right? The same reason for being as the macro. So now you're killing it on Aussie, killing it on Kiwi, killing it on USD. Pound, you're not so sure. CAD, maybe, and so on and so forth. And now you got real, true, fundamental reasons behind everything you're doing. And you're more than capable of the technical analysis to confirm the market conditions, whether they're favorable or not. And when they are favorable, you trade like crazy using proper rules of engagement. But you're switched on full-bore wolf mode. You are going to cull the herd. You're going to slaughter the sick and the weak and the old and the tired, the lazy and the sloth. And it's not even going to be fair. And your puppies are going to eat. Okay? And if you're a wolf, there's going to be a lot of bear meat and a lot of pig meat. Right? Boom! So to me, that's the most important. So really ask yourself about your own behavior. How do you behave? Do you log into your account like this and you look for your trade and you don't look at anything else? But Oz, it should be that way. Oz, that's how you should feel. You know, when you read the real history books on those 300 Spartans, you know, they would back themselves into a narrow canyon, you know, the big ones where they fought the Persians, right? They backed themselves in a canyon so all the Persians couldn't attack all at once, so that was a good defense. But they would kill so many people in a day when the Persians would go back to camp to rest, right, and to try to heal their wounded. The 300 would go out at night and build a wall out of the dead people. Once again, just to slow people down. Just build a huge wall, like towering wall of dead people. Tens of thousands of dead bodies, which is amazing. And I'm pretty sure it was 300 Spartans and like 3,000 slaves, but they always forget to mention that part too. But anyways. Mikhail says, I read FX Street News before I trade. Good, but we're not interested in news. Couldn't care less about news. Fundamental analysis, yes, but news, irrelevant. Okay? So somewhere in this period, okay? You know what? Let's go back to the Aussie so it's more specific. Where's the Aussie? Daily. I got to go back out. Okay? So somewhere in this period, okay? And if I'm wrong, I'm wrong. Let me know if I'm wrong. But I believe somewhere in this period, I said Aussie dollar is your best China play. And you could be buying this pair for the next 5 years minimum. Can anybody confirm that? And if I'm wrong, what date was it? I know it was in here, and I believe it was before June 18th where I left the market, which was here, right? I think it was April or May. If I'm wrong, please let me know. And if someone does remember, please let me know. And if the webinar has died, let me know. Well, not the Fed news. I don't think that was it. Now, the 18th was important, right? This is where I said I'm taking profit for the summer. So I avoided this whole month of nothing. Notice that you could have still got the same price as soon as we got through summer. So really, you could have taken June, July, August, September, and part of October off, and you wouldn't have missed anything. Okay? So I think it was in here. Okay? Okay, but anyways, guys, I want you to think of that as a differentiation of news. How much news would I have skipped if I said in here, and I'm quite sure this is accurate. In this period, I use news here and analysis of economics fundamentally. Okay, I analyze the news and the fundamentals. More importantly, I understand a central bank's reaction to the trend in news. I understand what they're thinking about, what their behavior is, and what their policy is like. And I listen to very specific words. And there were very specific words that happened in this period. And so I know I would have followed up in this period, right? But very specifically, long for at least 5 years. Okay? Okay. So going back to Mikhail's comment, that he goes through and he reads the news at FX Street every day before trading. Good. That's great. That helps with relative strength. That means if you try trading a 5-minute chart and a 15-minute chart only, yeah, that's good. That's good. You'll make you'll make 30 to 40 to 50 pips. Okay? Great. Now, think of it this way, though, sort of boss George Soros mode. Okay? Almost nothing could possibly happen that would change the fundamental flow of money around the world. Now, some things do, but they are rare, and I just happen to know what they are, and then I teach you those things. But the day-to-day news, Christine Lagarde is going to wah, 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 wah. Who cares? Now, it does matter, but 99% of the time, it doesn't add up to a hill of beans. Because what we trade is not news. We don't trade volatility. Okay? We don't trade volatility. We trade trend. I don't even trade relative strength trend. Okay? I just trade the fundamental flow of money. I like to think of myself as the Thor Heyerdahl of Forex. I build a raft, and all I need to know is where the currents are. And the rest is taken care of. I can float out at sea with nothing but a raft and catching the currents. Oh, there's no wind today. No, that's all right. I'm on the current. I'll get there. Okay? And if you don't know Thor Heyerdahl and the Kon-Tiki, let's do a quick history lesson. Thor Heyerdahl. Look at that. Norwegian adventure. Cool. Okay. Google it, man. Google it. Thor Heyerdahl was a Norwegian adventurer and ethnographer, the mapper, right? Ethnographer. I have to look that up. With a background in zoology, botany, and geography. Noted for his Kon-Tiki expedition of 1947, in which he sailed 8,000 kilometers across the Pacific Ocean in a hand-built raft from South America to the Tuamotu Islands. And, check this out, he predicted the exact day that he would land in those islands. And he got it right. He hand-built a raft out of trees. He didn't even use rope. He made his own rope. Completely 100%, as if it was 1,000 years earlier. He made that boat out of raft, sailed 8,000 kilometers, and landed in the islands the day he predicted. No engine, no motor, doesn't even have a real sail. What did he do? There was a sail. But not much, right? How did he do it? He understood the currents. I understand the currents. And I try to teach you every single day the currents. I don't fight the currents. They work for me. Day and night, moving us forward. Day and night, moving us forward. You guys read the book, huh? Yeah. So Thor Heyerdahl. And the next one I want to give you then is Shackleton. There we go. Okay. Now you got to study Shackleton. Sir Ernest Shackleton was an Anglo-Irish Antarctic explorer who led 3 British expeditions to the Antarctic. He was one of the principal figures in the period known as the heroic age of Antarctic exploration. So in one of his this happened to him. Okay? He's cutting through the ice of Antarctica. Then he gets locked in the ice. The ice starts taking over. And there's his ship. No radios. No icebreakers from Russia. How would you like to be standing with a bunch of your crew? There's them and there's the boat being crushed. You're on the ice. You're not even on Antarctica. You're on the ice floating next to Antarctica. No one's coming to save you. There's no radio. There's no helicopter. They haven't been invented yet. They spent a year out there and nobody died. Do you know what the secret of success was as they starved to death and froze to death? They crossed the worst ocean in that little boat. The coldest, darkest, deepest, stormiest part of the entire global oceans. They went across in that little boat after their main boat died. Of course, they had to carry that boat 800 kilometers. Okay? Do you know the secret to their success? What this man did for them? Regiment. Every single day, they did their job. He gave them work to do. They did the work. And the message here as a trader, your survival as a trader is not just doing stuff. The boat's sinking. He made them wash the deck. The boat's sinking. Clean the boat. Doing your job as a trader is going to be what gets you through this and you survive to year 10. If you can get to year 10, you're going to be golden. But you have to have the regiment every single day without fail. You must do your job. And I try to be an example of that. Of if I'm sick, I coach. If I'm in Hong Kong, I coach. If I'm in South Africa, I coach. If I'm in Orlando, I coach. If I'm in Paris, I coach. If I'm in London, I coach. I coach day in and day out, day after day, year after year, decade after decade, without fail. Most of the failure is YouTube or my internet, but very rarely me. Every single day without failure. And Ernest Shackleton is an inspiration to me, and I always think about it. In fact, I own his book, but I also own his journal, his day-by-day journal. He wrote everything down. Today we saw a seal. Today we saw some birds. Writes it down every single day, even though they're freezing and starving to death. He took his notes. They did their jobs. Amazing. And nobody died. And if you read the book, like if it was a movie, there's no way you would believe it. You would not believe it. But they did it. So you can do absolutely anything. Hard work will do it. A little luck wouldn't hurt. That's when things were good. Cut the ice by hand, yo. But then there was a day where you said, you know what? Abandon ship. If they all sat on that ice waiting to be saved, they would have all starved to death. And that would have been the end. Okay? So very cool. So literally, I've read his, handwritten notes. What's the point of keeping a journal if you're locked in the ice in Antarctica where you're clearly going to die? What's the point of keeping a journal? What's the point of scrubbing the deck? Do the job. Okay? Good examples today, I hope. What are the examples? One, you must have regiment. You must do your job and do it superbly. And number two, ride the currents. There's no sense going out to the middle of the Pacific Ocean on a hand-built raft if you don't know the currents. I think once you get those two things together, you can do anything you want, any way you want, any methodology you want. I don't care at all. You'll be a success. I know you. You'll do it. So my tools, the moving averages, pivot points, all that kind of stuff, MACD oscillators, all that stuff, you don't need it. They're helpful. You don't need it. You can do anything you want. You want to use something that I don't use? I don't do Elliott Wave. You want to do Elliott Wave? If you have regiment and you understand the flows of money around the world, you will be a success. I will bet on you any day. Okay? So it's not about technique, folks. It's an uptrend. Buy the dip. There's no technique doesn't matter in that point. Cool. So thank you for being part of my team. Thank you for being part of Forex.Today. Thank you for being a client of Traders Way. If you haven't signed up yet, please visit tradersway.com. If you want a link to my book, it's in the description below. If you want a link to my training courses, they're almost 80% off right now. The link is in the description below. If you like my charts, templates, and setups, guess what? The link is in the description below. And a bunch of other things, I'm sure. So have an amazing day. And if you're in my swing trading group, we will be swing trading. I think it's a Thursday. Yeah, it's Thursday. So I will see you in about 4 hours, I guess. I'll see you in 4 hours. We're going to swing, swang, and swung. It's going to be epic. Yeah, it's going to be so amazing. They're going to teach it to kindergarten children to say it was one of the greatest days ever. Or at least it'll be something to do because it's part of our regiment. Oh, where's my macro? The question, Juan says the macro. I got an email by someone very, very upset yesterday. They're like, I can't attend it live, and you said you're not recording it, and this is, I joined or I upgraded my account so I could have access to this. Whoa, 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 whoa. Whoa, you have to understand, I'm not designing a program to screw people over. Okay. Yes, I'm recording them, of course. 2 p.m. Eastern Time on Tuesdays for people that are in my war room, that have access to my war room. 2 p.m. every Tuesday, we're going to do macro. Is it recorded? Yes. Is it put on the main FX Bootcamp website where people didn't upgrade to attend live? No. No, it's not. Is it being recorded? Yes. So when we are done, and we will be done when we feel like we're done, could be 5 weeks from now, it could be 16 weeks from now. We'll end the course when it's done. Every Tuesday, we'll do something towards the course. And then maybe by summer, when it's done, it'll be made available to everyone that has access to the FX Bootcamp training courses. Okay. Howard says, can you post last week's Thursday session? It is posted. Should be posted. Supposed to be posted. I did post it. It's on the site. And if it's not posted, something must have gone wrong at Vimeo or something. So then let me know, but I post them. Cool. Oh, you didn't see it either? All right, well, I'll look into it now. Okay? I'll look into it now. Must have been, maybe I didn't click a button or something. Cool. Yes. So thank you, everybody. And Dr. H, post that in the comments below the recording of the video. If you refresh your page in 30 seconds, you should be able to leave comments. Write it in the comments. If you learned about, keyword is currents, document that, okay? So peace on earth. Oh, is it just the wrong date? Oh. Peace on earth, may the pips be with you, may our profits be above average. Cheers.